those are the types of easy transactions that a compliance monitoring process should, and indeed in many organizations does, flag.
You're listening to KBcast, the cybersecurity podcast for all executives. Cutting through the jargon and hype to understand the landscape where risk and technology meet. Now, here's your host, Carissa Breen.
JM, welcome to the show. I'm really excited to have you here today to talk about the book, The Key Man, which was written by Simon Clark and Will Lauch, which I read recently as fuel for our interview today. So when I finished the book, I emailed you because I was quite shocked around what I was reading. So I'm keen to have you here today, and I really appreciate your time because I know it is a little bit later where you are at the moment. And when I was reading the book, it reminded me a lot of that movie Wolf of Wall Street, like just sort of some of the ridiculous behaviors that were carried on and the mentality and the behavior. And when I'm reading it, the story did feel like it was something produced out of Hollywood, but in fact it was in real life. So I guess my mind was relatively mind blown, but I know we are going to get into some of the specifics of that book. But before we do that, we always like to start our podcast off with talking about you and your journey. So please talk our listeners through where you started to where you are now.
Thank you very much for having me, Carissa. I appreciate it. And it's not too late here, 5:30 Washington, D.C. time. But thanks a lot for having me on your show. I appreciate it. A little bit of my background. So I started my career in Washington, D.C. as a certified public accountant and, studied accountancy and international business. Started really in the public accounting space, auditing financial institutions, what you could consider the more boring part of public accounting. But grew up in a French household, which is important to my career because very soon after, about 2 or 3 years into my career at Price Waterhouse, I really had an incredible opportunity to work on a case that has stayed with me my entire life, and that was chasing Holocaust era accounts in Swiss banks. And so, as a young professional auditing banks and speaking fluent French, I was tapped by my firm at the time to go over to Switzerland and really help investigate around Swiss banks for those issues around World War II. So, really tremendous experience, and for me, a pivotal experience that moved me away from traditional accounting and auditing into the field of forensic accounting. So it was real sort of an important part of my career and was where I made that jump. After about 4 years in Switzerland on that project, I went back to the US and landed in New York for what was then PricewaterhouseCoopers. That firm, PW and Coopers and Lybrand, merged at the time. And, we're talking around 2001 timeframe at this point. And there were, if you recall, it was the age of Enron. So lots of large financial statement fraud cases. So Enron and WorldCom and Xerox. And I got to work on a bunch of those cases, including WorldCom and Freddie Mac in particular. And for those that have followed this space, those big financial statement issues led to pretty significant reform in the US, and specifically a law called Sarbanes-Oxley, which really made it quite difficult for firms like the Big Four or the Big Six at the time to both perform public audits or audits of public companies, but also provide advisory services. So the forensic accounting work we do is typically on the advisory side. So there were questions really in the industry as to whether or not those two things could continue to be done in the same type of firm. So I left Price Waterhouse at that time with a couple of guys, and we started a small firm. And I was quite fortunate to get a really interesting phone call from Paul Volcker, who was the chairman of the Federal Reserve in his past life, and also the head of that project in Switzerland. And he was taking on the role of investigating the United Nations for the Oil for Food program in Iraq. And so I had the good fortune of being at the right place at the right time, and again, helping Mr. Volcker on quite a historic investigation. and really the largest fraud and corruption investigation probably the world will ever see, which was chasing Saddam Hussein bribes around the globe for a couple of years. And that case, again, super interesting and launched me into a lot of what I've done since then, the last 15 years or so, which is focusing on large white collar and corruption investigations, and also helping companies on the compliance and internal control side to beef up their compliance and controls. So that's a bit of my background, Chris.
Wow, that's awesome. Would you say because you studied traditional accounting, that's definitely helped with your knowledge in terms of the forensic accounting side of things?
Yeah, it's really a critical piece to it, right? And, there's a few different avenues, or I should say many different avenues, as being a young accountant in terms of what you might be able to pursue. I've never fancied myself a very technical accountant. There's a lot of complexity in the field of accounting, whether it be financial reporting or tax accounting, et cetera. I was always more of a generalist, but it's quite important in what we do to understand how debits and credits work, to understand how financial systems work, to understand how to read a trial balance and a general ledger and financial statements, right? Ultimately, what we do as forensic accountants is chase the money and follow the money. And somewhere that money needs to be accounted for in the underlying books and records of an organization. So, absolutely, you have to have an understanding of accounting to do what we do.
Would you say that's given you inherent advantage, perhaps, because you do have that fundamental knowledge to understand things, as opposed to perhaps someone else that hasn't come from that background?
Yeah, it's actually really interesting. The field of forensic accounting has really blown up in the last, let's say, 20 to 25 years. And more and more over the course of that time period, I've met folks that call themselves forensic accountants that are actually not accountants, right? And so the term forensic accounting has really morphed into amalgamation of accounting and investigations and due diligence and technology. So it's been a bit of a mishmash of things, but I think at the core, the most talented forensic accountants that I've worked with have started their careers in accountancy and in public accounting, because they really understand, again, how those debits and credits work. They understand how to reconcile accounts, and ultimately, those skills are the base that you use really to identify problem transactions and identify red flags, which is what forensic accounting is all about.
Yeah, that's awesome, and I guess it really showed because when I was reading the book, I know that there were certain elements that I think because this whole situation had carried on for so long, I think that because of your knowledge, it really helped unravel the situation. So let's get into the book now. I read the book quite slowly. I do read relatively fast, but I wanted to read this quite meticulously with a fine tooth comb because I didn't want to miss anything. And I know that your firm, Ankura, who you work for, was referenced in the book, as well as yourself, Jean-Michel, personally, which was pretty cool to read, actually, because I've never actually read a book and I could speak to someone that's referenced in a book. So that's my first time. So I was actually like, oh, I know that guy. Well, half know you, so to speak. Uh, so perhaps for the listeners who don't know much about the story, can you please just provide a high-level synopsis of the key man with Arif Nakvi and how he did defraud millions of dollars from investors, including the Gates Foundation?
Sure, I'm happy to, and it's a really fascinating story, and one for which we didn't get involved until very, very late. And I should probably just clarify for you, Chris, and your listeners. The fact that my firm worked on a part of this matter indeed is in the public domain now. We were actually outed quite early on by the Wall Street Journal and the Financial Times and other media outlets. And as you say, we are named specifically in the book. That said, we are bound by confidentiality requirements and restrictions by the clients that hired us. So, I won't be able to get into a lot of details on what we did and what we saw. But the book does a phenomenal job at laying a lot of this out. So, happy to talk about what what specifically is discussed in the book, as opposed to other specifics that may not be. But that said, the Keyman is a fascinating story, and again, I would urge anybody to read the book. It's called The Keyman by Simon Clark and Will Lauch, and at its core, really, it's a story of a guy, R.F. Naqvi, who really built an empire. He built an empire in the private equity space. And what was really fascinating about this book, and again, I learned a lot of this as you did and other readers, because I didn't get really involved until 2018. But the manner in which this gentleman built this firm is really amazing and astounding, and was really based on successes early on he had in the business and in the marketplace, really generating incredible returns for his investors, and continue to grow and grow his firm. I think there's a pivotal point in this man's story and the growth of his firm where he really was keen on trying to alleviate a lot of the world's problems in developing countries. And his thesis was really that there could be room for both what is called impact investing, right, which is investing in developing countries to further social impact, but also make money at the same time, right? And so, really, this confluence of ideas that he could generate good for society and also make money, and make money for his investors. And that was really the premise that he used to build his firm, and built his firm to a $14 billion sort of private equity empire, if you will. And really fascinating, that premise was very attractive, right? And it's very attractive to high-powered individuals and politicians because of that social impact component. I think as you read the book and as you followed the story, the problem is things started to go awry for a number of reasons, and as is alleged in the book, and as is alleged in a number of media outlets, there were misuses of funds allegedly for both trying to plug holes in problematic investments, and also allegedly for funds having been used as RF's own piggy bank. Again, these are things that are described in the book that I'm not necessarily concluding on. But what ended up happening really is sort of a robbing Peter to pay Paul scenario, where funds were missing in one particular location, and as incoming funds were coming in from new investors, those were being used to plug holes. This lasted a long time, from what we can gather from the book, years and years and years, until ultimately certain investors started asking questions and wouldn't take no for an answer. And ultimately, that was when we got involved as helping out a number of investors to audit and review some specific investment.
Yeah, I think it went on for like 16 plus years. That whole thing shocked me, because one of the things I was curious is, like, Arif had great influences in these powerful circles, like including Richard Branson, Bill Gates, Barack Obama, and like many high net worth individuals, including like Middle Eastern sheiks. And so, would you say, from your experience of doing this a long time and the cases you have worked on, is this type of jovial personality and behavior common with many of the white collar crimes that you personally have dealt with?
Yeah, it's an interesting question. And I think, as I thought about your question a little bit and went back to some of the big cases in my mind that I've worked on, I can definitely see a thread of narcissism in a lot of the characters that are central to some of these big frauds that I've worked on. I'll take, for example, the case of WorldCom. WorldCom was headed by a guy named Bernie Ebbers. And Bernie Ebbers was a young man from the middle of Mississippi, right? We're not talking New York City or Washington, D.C., or any powerhouse financial place, but the middle of Mississippi, who ended up building a telecoms empire. He acquired over 60 companies. and ultimately acquired one of the biggest telecoms companies in the US, MCI. He developed into a personality that could not lose and would not lose, right? And sort of this narcissism led him to continue on this acquiring spree, and ultimately had to falsify and undertake one of the largest financial statement frauds at the time. The stories that we heard about him were really, he's the elephant in the room. What he says goes, right? There's no way but to get in, no other way but to get in line with Bernie Ebbers, right? So this idea that that I can do no wrong and that nobody will tell me otherwise, was quite clear. I think what you get from the RF Nakfi story in the book is very similar, right? It's is I'm the leader, I'm the captain of the ship, and you need to get in line. Very interesting. I think about the Oil for Food program case, and a little bit of a darker story because we're talking about Saddam Hussein. But again, very charismatic. Nobody's going to tell Saddam Hussein sort of how to run the country and how to structure all of those bad acts. But even other players in that story, in particular, the UN head of the program, a guy named Banan Savan, he was hobnobbing with heads of state, with the presidential elite around the globe, with corporate elites, right? And really got himself and elevated himself into a position where, again, he thought he could do no wrong, and he thought potentially that he was above the law. He was ultimately indicted with accepting bribes on that case as well. So yeah, I do think there's this idea of surrounding yourself with power brokers is sort of central to the theme. I think interestingly and very different with the Abraj story is there was an altruistic component to it, right? So a lot of these other cases that I've worked on, there really isn't an altruistic angle, right? It's about making money, building a business, selling the business, and making everybody a bunch of money. I think in the case of the Abraj story, you're talking about someone who was selling something that these sort of rich guys and elite power brokers wanted, which is impact, right? How do we do good with all of this money? That's what attracted, I believe, the Gates of the world and the popes of the world, et cetera, to this particular story. So super interesting, I think, how he himself as an individual was able to sell this, but it was really what he was selling which was critical, which is impact.
Yeah, you're so true. I guess that's how, like you said, he got Gates of the world, because he kept leading with putting investment in developing countries, and he was flying all over the world, going to all these conferences and talking to all these people. So I guess he built quite a name for himself. But there was a moment in the book where I think the Gates Foundation, and there was a guy in there, and they started to understand, well, something's not right here. And I think they were on stage, and I don't know specifically if Bill Gates had an inkling, but apparently, according to the book, he was not like talking to him, and he sort of sat away from him. Like, he was polite, but he obviously wasn't the same demeanor where he had been historically speaking. So I found that interesting. So the other thing that I want to get into is, which I found really interesting, is one of the circumstances around the auditing firm that audit the fund's annual accounts. So it's just every time it would happen, they're like, oh my gosh, the auditing firm's going to come in, we got to plug the funds. And it was literally at the 11th hour, another investor would come in, plug the hole, and then it would completely conceal the theft. So it just really got me, because it was like so many times that this had happened that no one ever sort of really cottoned on to what was happening. So talk through some of your experiences in the forensic accounting, because I'm curious to know, and I mean, I know you can't speak too openly about it, but if auditing firms looking at the funds in the account, are they just purely looking for, yep, money's in the account, tick, next? Or they're actually going through meticulously to see, well, hang on a second, a large sum of money has been plugged in. like yesterday, that doesn't add up.
Yeah, it's a great question, Carissa. And I think, for those of us that have been involved in public accounting, that have been part of accounting firms and auditing firms, we obviously have a different take on how it works than potentially the general investing public. I think your question is super interesting and timely. I don't know if you caught the news today, but that the audit firm in question is now just subject to a $600 million lawsuit in respect of Abraj, or the alleged failures of their audit processes in Abraj. So it's a $600 million price tag potentially, and so the stakes are massive, right, for audit firms to get it right. We hear there are scandals all the time. I started talking a little bit about Enron and WorldCom, these big failures from the early 2000s. These are what led to the demise of Arthur Andersen, right? Which was one of the powerhouse auditing firms at the time. The stakes are huge. You don't have to do much but open a newspaper and read about 1MDB, or read about Wirecard, or read about Luckin Coffee, and question why and how these frauds can go undetected, right? And how they can go undetected for so long. There are audit procedures that are designed to give assurance on financial statements. Audit procedures are not designed to detect fraud, right? And so when you read an audit opinion, or you understand how audits work, it's expressly stated that audit procedures are not designed to detect fraud. They're designed to give you reasonable assurance that the financial statements are free of material misstatement, right? So there's a big gap there between what you're seeing on a financial statement and that being accurate, within a material amount, and whether or not there's fraud in an organization, right? I think for those that read the Key Man, they will question how the auditor could have missed these things, right? As you say, large sums of money coming in and then large sums of money going out. I think it'll be interesting to follow these particular cases against the audit firm in respect of Abraj, and see where they go. I think really, you boil down to a couple key concepts in auditing, and these will come out if when you read the book. The first is independence, and as an auditor of a company, independence is critical, right? So you want to make sure that there's nothing that would impair your independence in the process. If you read the book, again, this is not anything that we were directly involved in, but you read the book, and I think there are natural questions as to whether the auditor and the audit team were truly independent from the corporation that they were auditing. I'm quite certain this will be one of the topics and issues that get raised in this particular lawsuit. The other is the standard around professional skepticism, and right, the auditor has to undertake professional skepticism. And when that auditor sees something that doesn't really make sense, they need to dig into that and they need to test more, right? And so those are areas where, again, we don't know what the audit firm did in terms of its procedures. We don't know whether they erred in terms of their procedures or not. But I would say, very interesting when you read inflows of hundreds of millions of dollars just for certain periods of time around the dates in which those balances needed to be confirmed to investors. All those are red flags that probably fall into the realm of, hey, let's use our professional skepticism and really dig into what's going on. So again, it'll be really interesting to see how these pan out. But these scandals, we see them on a weekly basis, on a monthly basis. And so I think the auditing firms and the audit community is going to continue to have to, hone its skills, train its staff to make sure that they're exercising professional skepticism, that they're leveraging technology to find things, so that ultimately, hopefully at some point, these types of large scandals are less frequent.
Absolutely. And I asked that question because perhaps if they had done more of a deeper dive, this whole scandal could have been unraveled a lot earlier on in the piece. And I say this because when I'm reading the part about the Gates Foundation and like 100 million US dollars, which is a lot more than Aussie dollars, was defrauded to, when you're talking about the Gates Foundation, was actually there's victims involved. I think that's what really got me the most, right? So it's like, okay, reading one thing about, I don't know, ripping off JP Morgan or whatever, but then when you've got victims involved, that to me is like another level. And so would you say, I mean, you sort of touched on it before, but I'm keen to sort of explore this because you're saying you're seeing this every day, every month, and there's levels to it. I understand that. But would you say that companies just aren't really effectively utilizing appropriate governance and compliance frameworks? Because, I mean, even this whole abragery, as they refer to it, this could have been solved a lot earlier. So I'm keen to understand, are people just defaulting to old ways of auditing procedures? So that's my first question. But then my follow-up question to that would be, what about auditing procedures? Are they going to now have to change and reinvent themselves because we can't keep going the way we're going, right? Or else people will be bankrupt left, right, and center.
Yeah, I think there's two really important things to think about here, Carissa, right? That year-end audit that we're talking about, right? That external audit function, that's just one piece of the puzzle, right? And that's providing independent assurance on the financial statements of the organization. Okay, there's another really important component, and that's what's the organization itself doing, right? So, what's the company itself outside and separate from its external auditor? What's the company doing to make sure that the way in which it does business is acceptable, it's appropriate, it's within the norms of proper business, it's within the norms of its own code of conduct and within its own internal control structure, right? So, separate from what the auditors are going to do at the end of the year, how does the governance and the control and the compliance structure within the organization itself work, right? And so you can think of those two, a bit in tandem, but really as two separate things. And thinking about, really sophisticated organizations from a compliance and a controls perspective, these are organizations that don't rely on a one-time year-end audit to tell them that everything is okay, right? They're relying on their own processes and their own internal control structures to get comfort that they're doing business the way that they want to do business and that transactions are accounted for in the right way, right? When you look at, if we talk about compliance for a little bit, you look at one of the hallmarks of an effective compliance program in an organization. One of those hallmarks is how well is the company monitoring itself, right? How is it policing itself? And what we see as a best practice is really two components. It's what internal audit is doing, right? And if you can think about internal audit as that group within the company that's doing some of the things that your external auditor would be doing. So they're looking at things retroactively. They may be executing internal audits on a yearly basis for what the business has been doing over the last 6 to 9 or 12 months. So internal audit is one piece. And then something called compliance monitoring is super important, and it's been really something that most organizations have been doing, transaction monitoring, compliance monitoring, for the last 5 or 10 years. And that is much more timely, right? That's looking at things not within the lens of the last year, but it's looking at things within the lens of the last month or the last week. In some very sophisticated companies, it's looking at things on a real time basis, right? Where seeing an inflow of $100 million and an outflow 1 week later, those are precisely the kinds of things that a sophisticated compliance monitoring mechanism within a corporation would identify. right? And it would get flagged to a particular group that's in charge with monitoring those sorts of things, right? It won't get flagged to the individual that's executing that transaction. It'll get flagged to, that more independent function. And so when you think about, the sorts of transactions that you see described in the book, in the Keyman book, you could certainly envision mechanisms whereby, had they been in place, $100,000 inflow in round numbers, right? And so, as we understand it from the book, those transactions were big round dollars, right? And then big round dollars going out. Those are the types of easy transactions that a compliance monitoring process should, and indeed in many organizations does, flag, right? So that idea, as you raise, why did it take so long for these things to get identified? I would venture to say that in an organization that has set up the proper controls and that has set up monitoring on a timely basis, and again, you don't have to invest tens of millions of dollars into real complex AI and IT processes to do this necessarily, but doing it on somewhat of a timely basis, be it weekly or monthly, to identify those sorts of red flags, dig into what those transactions are, and make sure that they're legitimate, right? Those are the types of things that organizations now are more and more doing. And super important to your point, that they can't go on for weeks or for years and years until an outside party figures it out.
Yeah, you're so right. Because I guess I was surprised that, I mean, even if it was calling like Air Arabia up at like the 11th hour going, oh, just transfer me like $175 million, and they just did it. But then it was like, well, he also sat on the board, so there's probably a bit of that going on. So I guess, I don't know, I was just curious because, I mean, if I'm doing due diligence as an investor, are you surprised that perhaps they're like, we need to make sure that this is being independently monitored to, in case there were something to go wrong? Like, or were they just so sold on this guy because, I mean, there are other things that happened that just led to believe that people trusted this guy implicitly? So I don't know, I was just curious to see that from a due diligence point of view and a QA point of view, that things are being conducted the right way to ensure that things aren't being fraudulent. I don't know, like, what are your thoughts on that? Or are people going to become more inclined because of what's happening as of late?
Yeah, it's a timely point, and one actually that I've been dealing with significantly since the fall of Abraj. We've seen a tremendous amount of interest from large institutional investors to do exactly what you're saying, which is rethink how they've been thinking about due diligence, right? And the old way, if I could venture to say, in a pre-Abraj world, the old way that an institutional investor, limited partner in a fund, might undertake due diligence, would be to look at policies and procedures, to look at what they have on paper, what are the compliance policies, to have some discussions with management, that's sort of how, and to get the audited financials, of course. That's, I think, under the old regime, how really the extent to which due diligence would be performed. I think in a post-Abraj world, what I'm seeing in my practice, and what my colleagues and I are focusing on, is really enhancing that view, right? Our position is, it's not enough for that fund manager, that GP, to show you that they have a policy, right? You need to get comfortable that they're actually following that policy, right? It's not enough for them to describe that they have an internal control structure and they do all of these things. You need to validate that, right? And I think in a lot of the cases that we've done, we've seen shiny websites about how great their compliance is. We've seen websites describing how important the members of the supervisory board are, right? And what a great board they have. But what's the board really doing, right? Is the board really walking the walk on compliance and on controls? Is the company really implementing, and has it implemented these things that it says that it's implemented? And without really getting into the weeds, you really can't tell. And so a lot of what we've been doing, and this includes 4 large investors that got burned on Abraj, is really rethinking how they do that and helping them really think on a risk basis. Where's your risk with this particular fund manager? And think about really going down and performing some transactional testing, really getting into the weeds in some areas where that risk may be really acute. I think the way that that concept is being approached now is very different than what it was 4 years ago.
That's so interesting because I mean, I'm just looking at myself as an individual. If I'm going to give someone $100 million, well, US dollars, I'm going to want to make sure that they're doing the right thing. But like a lot of these guys are just like, oh yeah, here you go. One guy overseas was like $350 million, like not even any paperwork associated to it. Like that just blows my mind. So I don't know, like, would you, when you say about getting comfortable, how would a company go about doing that due diligence? Would they hire a firm like yours to do an independent um, audit on their controls, compliance frameworks, everything like that? You guys say, yep, it looks to be okay. Like, how does that work then moving forward for companies?
Yeah, it's really a combination, and I'm happy to plug myself and my firm. But a lot of people do this work. I think it's a combination for organizations on their internal due diligence processes, and obviously an investor will undertake due diligence on that manager to whom they're going to entrust 50 or 100 or 200 million dollars. I think where firms could benefit is really in some of the really specific areas around integrity due diligence and anti-corruption due diligence and things like AML or things like cybersecurity, which I know is one of your or is your main hot topic, right? And so I think what we find typically where clients are calling us, is they're good at assessing a whole bunch of things, uh, specifically in terms of the quality of management, quality of earnings, those sorts of things. How well that manager is going to source deals, how successful they've been. I think when we start talking about things like ethics and compliance and some of the technical areas like anti-corruption and integrity and cyber, that's when I think we've been seeing increased interest in bringing firms like ours in to supplement some of their own internal due diligence.
Would you say, I mean, you can only probably speak for the US, will this become highly regulated? Like, you must, if you want to, I don't know, put money into funds management company, this needs to happen in terms of regulation. There has to be mandatory sort of tick boxes you have to go through. Are we going to see that happening? Because there still feels like things are not quite as structured or regimented as perhaps they should be. Because if they were, perhaps we wouldn't have so much white collar crime sort of going on here.
Yeah. So look, I think, there's no question that, due diligence happens, internal audits happen, external audits happen, right? All of those things are in place, right? From a professional standards perspective and indeed from a regulatory perspective. I think, the risk you run into is you don't want to be too prescriptive in what the procedures are that need to be performed in each of those scenarios, right? So if you take what we do, for example, you know, almost all of what we do is rooted in a risk-based assessment, right? So when we go in and evaluate an organization, we're really seeking to understand where the risk is and where the risks are most acute. And you really want to deploy your resources and your expertise where the risk is the greatest, right? That could be financial risk, it could be reputational risk, it could be all kinds of different things, right? So I think there's probably some drawbacks in saying, okay, here's your checklist that you have to make sure that you do, because then that makes it too prescriptive and you may be missing things that otherwise would
Mm.
be important to cover, right? So it is a fine, it's a fine balancing act. But again, I think, if you talk to folks that do this for a living, like myself and others in the industry, it's really the body of work that we've done, that colleagues might have done in other firms. It's that body of work really where you understand how frauds are perpetrated. You understand what lapses in controls and compliance caused those frauds to allow to be perpetrated. It's really honing in on those things and helping companies plug those gaps. That's really important. Increasingly, we're seeing organizations in the last 5 or 10 years really spend a lot of money up front to make sure they get those things right, because the risk is so big if they get things wrong, right? You see
Mm.
settlements and penalties coming out of the DOJ and the SEC. I actually worked on the Australian wheat board case when I worked on the Oil for Food program. And you think about the amount of pain that the Australian wheat board went to. They were the largest payer of bribes to the Iraqi regime, right? And so, I would venture to say that if you go back to the AWB and say, did you guys learn your lesson on that case? It's probably yes, right? And they have a much different compliance program and structure than they did 15 years ago, right? So the stick is so big now that organizations are indeed making sure that they get things right up front, and it's morphing jurisdiction by jurisdiction. We're doing a lot of this kind of work in Saudi Arabia, for example, currently, and that's much more nascent in terms of the regulatory regime, and hence the compliance environment is much more nascent. But you see this really evolving around the globe.
Wow, that's crazy, because I guess I put my security hat on, and I mean, not everyone's guilty until proven innocent. It's not like that, but I'm always looking for risks, what could go wrong, um, that type of mentality. So, for our listeners, what are some of perhaps your key takeaways that you could share from this experience about a barrage, but also some of the other things that you've worked on? Because this is for an executive audience, perhaps, even if you want to speak more broadly and zoom out around doing the checks and balances to ensure that, you know, you're not going to be potentially be defrauded or something goes wrong in the future.
Yeah, I think the key takeaways for me, and for listeners in the audience that are compliance professionals and forensic accountants, this, I'm not saying anything new or particularly interesting, but really, from my perspective, organizations that are most effective in shielding themselves from these huge issues are really organizations that embrace ethical behavior and that embrace compliance, right? So the idea of ethics and compliance is huge, and the idea that tone at the top is really where it all begins. And again, for those of you that will read the Key Man, and for you, Carissa, that have read the Key Man, if you think about what the tone at the top was at a barrage, and again, this is just from reading the book, you don't get a picture of an organization where ethics and compliance were really at the top of the agenda, right? You don't get the idea that the message was, we need to do the right thing. We have controls and processes in place to make sure we're going to do the right thing. And we have processes in place where if we don't do the right thing, that we can detect that and remediate it, right, and fix it. And so really that's where it all starts. And I think, at least in the US and in a lot of other jurisdictions, that's really becoming the norm, where ethics and compliance really are weaved throughout the organization. It's really important that it's not just a top level initiative, that it gets embedded into the organization, into the business, right? Ultimately, the business should own compliance in much of the same way as you likely talk about. Cybersecurity starts with everybody, right within the organization, not just the IT guy. The same holds true for ethics, compliance, internal controls, is that needs to get embedded into the business. And you need to set up those structures really where, everybody in the organization understands the importance of it. And that's really fed from the top, and making sure that the CEO the board, the CFO are really hammering that message, and they create the environment and the control structure whereby every employee in the organization is going to act ethically, right, and is going to behave in the way that leadership has set out. I think that's probably the biggest takeaway for me. And finally, really that ethical companies. It's quite well shown at this point. Ethical companies with the most enhanced and successful compliance programs, do really well in the marketplace, right? So at the end of the day, it's money well served.
I love those points. I think those are so accurate. I think they're definitely still that learning curve, especially in the cybersecurity space. If you haven't read the book, The Key Man, you should check it out. We're going to link it in the show notes. It was an awesome book. It will blow your mind, because I literally thought I was reading a movie, and I wasn't. It was real life. So, Jean-Michel, thank you so much for your time. And I can't wait to get you back probably next year, because I really want to get into some of these cases more specifically. So thanks very much.
Thanks, Carissa. It was a pleasure.
Thanks for tuning in. We hope that you found today's episode useful and you took away a few key points. Don't forget to subscribe to our podcast to get our latest episodes. If you'd like to find out how KBI can help grow your cyber business, then please head over to kbi.digital.
This podcast was brought to you by KBI.media, the voice of cyber.